Thank you for joining. We're going to look at cannabis accounting cleanup and also 280E refund, protective claims, that kind of thing as well. So I will jump right in. So let's talk about getting clients 280E compliant and audit ready as well. By the way, if you have questions, toss them into chat because I will see them easier. And I will, then I can hit those here. I'm going to open my chat up. So quick refresher, what is 280E? This is the one tax code that's very short, only one sentence. We've had massive 10-year lawsuits over this one sentence. I have hundreds of pages of court cases, but at the end of the day, it's just one sentence. And it says if you have a company that traffics in a drug on Schedule 1 or 2, you get no deductions and no credits on your tax return period. And so that's just the way it is. So we have to look at first, what does that term trade or business mean? They made that very broad for a reason. It means basically any business. It doesn't even matter if you have 10 entities or 0 entities. If it's a trade or business and you sell drugs, you're trafficking, you get no deductions on your credit to on your tax return. Now, Schedule 3 is approved to go away. There's a final hearing December 3rd. We'll talk more about this as well, but we think this is 95% done and will happen formally in the next 3 to 6 months. Cleanup. We see a lot of cleanup in cannabis companies as well. It's not always the same. Well, for one, we might have many verticals in one company. We might have farming, manufacture, retail, all in one company. Every state has their own cannabis rules. Most of them are not about accounting, but some of them are. And some of them are just like, you've got to file on time. You've got to do what they call clean accounting, or maybe you have to have an audit, however they define it, or you can lose your license. And if investors have put in, tens of millions of dollars into a cannabis startup, and the startup just blows it because they're kind of sloppy with their books and they lose their license, you're going to have some unhappy investors, a lot of lawsuits as well. Now, this 50%, I'm not sure if that's updated on California. They do have pretty sizable penalties. From my memory, it was 30 grand. But so that one comment, I won't swear by that one on the 50%, but we do got to do great accounting. We got to file things on time. We call it rock solid world-class accounting. Again, most companies I've seen in the cannabis space, they're the opposite of audit ready. They're usually a big mess. And not to mention, we've got attorneys out there telling these cannabis companies, hey, I don't care if you're one dispensary, let's set up 9 legal entities, S Corps and C Corps and LLCs and consolidations, which really isn't great advice, but a lot of them do it anyway. It makes their accounting tax bill go way up for one. We also see a lot of commingling of personal and various companies and intercompanies, which is tough as well. Onboarding to us is very important. We set up what we call a perpetual data room that's on their server with their cloud storage solution. Maybe it's Dropbox or Box or Google Drive. We can help them manage and update their own data and files better than they can. And it's actually valuable to them to have an organized structure. We build a permanent audit trail for every month. That means tick marks, tie outs, every balance sheet account, journal entries, documentation of why and what for journal entries, setting up controls and governance as well. This will benefit the business every which way to do this first. This is before we even talk about refunds or M&A or exits or whatever. This slide is an old one. I won't dive too deep in this. I actually made this almost 9 years ago for a single dispensary client I had. At the time, he just had one dispensary, and I was showing him what a mess it was. One transaction up in the upper left. We're buying a pound of weed, and they've got all these different systems, merchant services, the accounting software, the POS system, the seed to sale system, and on top of that, Excel, and oftentimes having different quantities or pricing whichever system you had to look in. So it could get really messy really quickly. Onboarding is super essential to running good engagements. So you definitely want a good engagement letter. You want to make sure you got good Canvas language in there. If you don't have an attorney, check with them on that. Um, Perpetual data room, again, this is where we set it up on the client server so it's valuable to them instead of having them share 100 files with me over at my building or my home. I don't need that. I don't want that. Why don't we just organize your stuff on your servers? And if I need it, I'll access it. And it's a great idea. National firms still don't get it. Regional firms don't. Clients absolutely love it. Why? Because they have access to their own data and it's organized and they can use it as well. We have a very good PBC list. And as we collect these PBCs, we'll be organizing these in the perpetual data room. So it might be organizational documents, investor docs, insurance policies, leases, debt agreements, all the kind of permanent files. And then monthly, as we go forward every month, the latest bank statement, the latest invoices, the latest tick marks and tie outs, all that stuff is maintained monthly. Monthly. If you do it right, your client's always audit ready, whether it's the IRS, whether it's someone doing M&A, or maybe a lender wants an audit, or investor, they're always ready as well. We also have action plan, got to have a chart of accounts ready to go, tailored to each cannabis vertical. We like to confirm debt for certain, especially in cannabis and equity. You'll often find out, and you don't want this to happen to you. Year two, I've had this happen twice with a mother. Mother shows up. Hey, did you know my son or daughter owes me $1 million? I lent them that to get this started. So you don't want liabilities to come showing up later and same on equity. The guy or girl farming comes in. It's like, oh yeah, I got 20% ownership. And I'm like, oh really? I didn't see that in the organization documents. Oh, that's okay. They just told me. They just told me I got it. I was like, well, that needs to be documented with legal documents as well. So we want to make sure we get that all well. We want to make sure their entity structure is good. Walkthroughs and controls I'll often do while I'm getting PBCs. It might take 60 days to get all the PBCs. I can actually help the process by building the perpetual data room, by doing controls, walkthroughs, meeting the right people, and helping get the stuff myself. Again, we'll do it by category. This is just a snippet of one. And put on their date requested, date received. And then we'll talk about actually, I don't know if we'll talk about pricing on this webinar, but one of our business models at Dope CFO is I would prefer my students go deeper and do many, many things for their clients in exchange for a super high fee. So if I show you how to get a client and they're paying you 25 grand a month and you're doing many, many things for them, for one, the CEO has already bought in that you're adding value and that you're an investment, not a cost. And so if you say you need something, that CEO is going to make darn sure you get it. The lower price your engagement, the harder time you will have getting PBCs or actually any help from your client at all. And they will. So if you have a client paying you $1,000 a month, they're telling you they do not value accounting, tax, or controls, and so they're not going to get you things either. And so if I have this and it's a share file, and I pop in later of the week and say, "Hey, I'm still missing these 4 things," he or she's going to get all over who should be getting me those things quickly. We want to get started quickly. I like to get an org chart, even just on a piece of paper. Okay, you're the CEO. Who's the COO? Who's doing marketing? Who's the head of the grow? Who's doing what? I want to get that little org chart, get access to any software systems and accounting systems that we need, start building out our PBCs, and we'll start actually building out our permanent audit trail as well, including our journal entry and open item checklist. And then I'll actually do the first 3 months weekly status reports with the CEOs to make sure that we're doing things correctly as well. We'll get to the 280E refund claims and protective claims, but before you even consider this with a client, you better make darn sure their books are squeaky clean, or your client's really setting up for a disaster. And if their books are not squeaky clean and you're in charge of their books, you're going to have a big headache on your hands as well. Permanent audit trail, if you've been in public or Big Four or whatever, you'll recognize this. We just tie out from what I call the original transaction or event to the source document to the trial balance into the month. We do a trial balance tie out by balance sheet account and significant P&L accounts. And then we tie upwards forward into all of our financials and then even into our value add reports like rolling cash forecast or our dashboards. We want those tied out as well. You know, you can build somebody a beautiful report out of almost any software, and built on crappy data, it's worthless to managing their business or getting them audit ready as well. So this is a very important thing. So in our permanent audit trail, we'll have a trial balance tab, but there might be 40 tabs in this one spreadsheet tying out the whole entire month from start to finish. When we're doing cleanup, if you haven't got an accounting degree, or if you have, it's good to go back and remember. You probably remember financial statement assertions. So when the client or someone presents accounting, financials or information to whoever, the banker, the board, the team, the managers, there's a lot of assertions in those numbers, and we want to be very confident that all these things are ticked off. So first and foremost, just accurate. We find tons and tons of errors. We're just, it could be just sloppy. The books are, there's an invoice that it was for electric bill, but you accidentally coded it to rent expense. You got to have a way at month end to go back and find and fix errors. Completeness. We have many things often left out, especially on the liability side. Very important. Cutoff. Are things in the right reporting period? Existence is huge, especially in cannabis, whether you're a manufacturer, a farmer, or a retailer. Inventory counts all the time and tying them out to the various systems. Rights and obligations, again, who actually owns this company? Who owns these assets? Do we actually know who the correct owners are for each organization, and then how it's presented and valued as well? This is just how we look at different accounts, key accounts. And so we start with the balance sheet always. And as you go down from top to bottom, obviously cash is very important. What are we thinking about on most assets? Existence is the biggie. And so does the money actually exist? Is it in the bank? Is there a bank rec? Do we know we have all the outstanding checks? We can kind of go down through these accounts receivable. We have agings tied to sales report, but all of these are going to be most important: existence and accuracy. Inventory, definitely count. Fixed assets don't change as much, so they're a little easier to tie out. On the liability side is where we want to make sure we have completeness. This is why we have our clients sign a letter in writing. You know about every single debt, every person that we owe money to, every bank, every note holder, every mortgagee, every friend or family member. We've disclosed all those, every credit card. We've disclosed those to you as well. And then accounts payable, we've tied that out to the AP aging as well. Same on equity. We want to make sure it's accurate and complete, and we have all the note holders. Once we get to the P&L, we're going to also existence, accuracy, completeness, and we're going to do tie outs. This is where we'll get into like POS systems for sales and cost to get sold, payroll reports for payroll. Again, go to the best source. If it's payroll, I want to see, are they using Gusto? Let's get the reports, make sure things are tied out correctly. Process summary. Again, accounting always follows legal documents. We're going to make sure to get all those legal documents, because how can you record, for example, lease expense correctly if you don't have a lease? You don't know what it says. Maybe you're missing percentage of sales or whatever. We're also going to start often at inception of company. If they want me to just start at beginning of the year, I'm going to just say, okay, I've got to start probably with the prior year tax return. We'll have no confidence in beginning balances, but we'll real quickly tie out January 1 balance sheet amounts, whether it's inventory counts or cash tats or whatever. And if I'm doing a whole year at a time, I can just download their whole year into Excel. I'll do materiality and we'll tie out the big things. And so like this is just an example, there may be 1,000 transactions, but I think this was an actual one we had. I'm trying to, this goes way back, but like it says missing over here on the right, missing, missing, missing. I'm going to be like, okay, that the one that's missing that's 2520. And again, it depends on size. If this is a $10 million company, I may not even care about the 2,500 one. I'm definitely not going to care about if I'm tying out a old year of tracking down every $30 invoice. Again, get your engagement letter signed, get a retainer always. We bill a fixed fee for every month going forward. So if it's today and we're going forward, I'm going to bill for November and December, but any cleanup before November 2024, they're going to be billed at an hourly rate. I would do 150 bucks an hour to make sure the client is on board with this, and the messier they are, the more it's going to cost them. We're going to do an action plan, give them the PBC list, and get those PBCs. Again, we talked about perpetual battery room, bank account reconciled, and then just walking down those key accounts. We talked about all this as well, liabilities and AP recorded. Once we get it totally cleaned up, we know our final journal entry. We can make one journal entry at the end of the year, each year, just to have one big entry that hits every account. And so you don't need to make 500 entries just to get the balance sheet accounts to where they are. And then when we get to the current year, again, we're just trying to get the ending balance sheet really clean, and then we'll come into the current year. Inventory is huge in this industry, so we got to make sure we are counting it regularly. We have lots of staff with access to the seed to sales system or the ERP system or the POS system. Hopefully not the accounting system. I try not to link these systems up to each other for that very reason. I want to make sure we have an iron wall on our accounting system so we can make the correct journal entries, but also make sure we don't feed an error in one system to errors in all systems. And Samantha, we don't give out our slides, but we give a recording to the afterwards. Yeah, so anyway, lots of inventory issues. We're going to have the SOPs and the accounting policy and procedure manual. We're going to make sure to have segregation of duties. We're going to do full counts every month on our cultivators, processors, manufacturers, dispensaries, cycle counts every single week. Many do it actually daily. We're always going to be tying these to the seed to sale, to the POS, to the manufacturing and the accounting system. And if we find errors, we investigate and fix them in all systems so that we can do this correctly. If we do good gap level cost accounting, we can actually save our clients taxes as well. I think throughout these slides, we're going to talk a little bit about the DOPE CFO program. So we built out these tools we've already talked about for cleanup and onboarding. We've built out in our program. I built and updated and edited them over the years, and not even just me. And I am an award-winning CPA as well, out of Big Four, long, successful career in accounting. But we've had many other Big Four audit partners and CPAs review and make edits to all of our work papers. So we're, at this point, 7-8 years in, they're pretty rock solid. Let's talk quickly about Schedule 3. Cannabis currently is on Schedule 1 with ecstasy and meth and peyote, heroin, LSD. Those are per the government, all drugs, no medical use. They're harmful, they're bad, bad, bad. Cannabis has been approved now from the Human and Health Service Department, HHS, the FDA, the DOA, and the DEA, and the DOJ. The final hearings on December 2nd, cannabis is moving to Schedule 3. Now it's not anymore an illegal hardcore drug. It is medicine, just like ketamine is, just like Tylenol with codeine, steroids, testosterone. You go get those steroid shots. for your muscles. Those are all medicines. They're regulated, but they're legal. And so that's going to be huge news. It's going to double the size of this industry in the next couple of years. Here's the timetable. This is off Aaron Smith's slides. Actually, Aaron Smith, who's the founder of NCIA, he was the keynote speaker at AICPA. He's coming to our private member group on Monday for all our Dope CFO members to talk about the latest rescheduling news. We're now past the public comment period. 92% of those comments were positive. Overwhelmingly positive. In fact, many said, hey, we don't need to reschedule cannabis. Let's take it off the schedules altogether. That would make it like hemp and CBD, also like alcohol. Alcohol is regulated. It's not on the schedules. I think that's ultimately where we're going. Why? Most Americans want it. 8 out of 10 Americans want that. And we're seeing it here. We're seeing it at the federal level. It's not a red or blue issue any more than alcohol legalization is a red or blue issue. And so that's why we're seeing this move so quickly. The DEA's hearing is happening December 2nd. There's a few more steps, but we should be there we think within 6 months. There will be lawsuits. I'll mention that point on bullet 4. But cannabis will be on a Schedule 3 while the lawsuits aren't going to win. There's two. We now have medical evidence, we have the public, and we have the government's own agencies, the DEA, the DOJ, the FDA, and the HHS department. There's no way anyone's going to win these lawsuits. So we got hemp and CBD legal in 2018. I think 2025 is illegal. We're fully legal for cannabis as well. And we're going to see massive growth as well. We're going to see banking come on. We're going to have possibly retroactive 280E relief. We'll talk about that, descheduling, and a new pathway. 2018, we saw this already. So we've gotten to see this once. CBD and hemp were on Schedule 1 and they both got pulled off. They didn't get rescheduled. They got descheduled. And so what happened when they got descheduled? You saw it. CBD went from being nowhere to everywhere overnight. And we all know about it, including my 87-year-old mom knows about that as well. Another thing, Aaron Smith brought this up as well. First time ever, we have a completely pro-legalization ticket. Even Biden was not fully on board with cannabis, but Harris and Walz are big cannabis supporters. But if you look at the other side, Trump is a cannabis supporter as well. He's come out very recently on Lex Friedman's podcast saying he is pro-cannabis legalization. And in fact, he's going to vote in his home state, Florida. They're having a legalization vote here in a couple of weeks. He's voting on that. Let's look at 280E strategies. I'm going to reference a couple slides from Jen Benda. She's a prominent tax attorney. She helps plan and lead the AICPA cannabis conference as well. She's out of Holland Hart in Denver. She's really amazing. If you have a client needing a tax attorney, she is truly one of the experts. The first reminder, she actually did a panel with Luke Ortner, who's the senior chief counsel of the IRS. This is 2 months ago at AICPA conference. And both Luke and her were saying, hey, look, 280E still applies. Cannabis is still on Schedule 1 for 2024. And that's the way it goes. So before we even talk about refunds, let's just note that real clearly. and Luke was there. And Luke, by the way, is a big believer that 280E is not going to apply next year. And in fact, the IRS is already working. They are taking steps to look, is it going to be retroactive? If it's legal May 1, is it going to start May 1? They're starting to look into all the issues. But if you have a client filing a refund claim right now because they think 280E is going away, that is an extremely risky. I would never suggest that to anybody. And this is Jen Benda's slide. Refund claims are reviewed closely, and you're going to be setting you up for scrutiny, more than likely an audit. And you better let your client know. First off, are your books squeaky clean? Secondly, do you really want them peeking under the hood? And even if you're okay with it, are you sure your investors are okay with it? They may not be very happy. And by the way, if it's a flow-through entity return and the IRS comes to audit that can bleed out to the investor's returns. Talk about a way to make an investor unhappy if they get an IRS audit just because you, the CEO of the pass-through return, filed a refund claim. So our recommendation is do not do this. Do not file a 280E refund claim right now. If you do that, you should at least consider these things, and not only consider these things, likelihood of success, how much money is it going to take you to defend this in court, how much are you going to pay. These prominent tax attorneys, by the way, in cannabis charge between 600 and $1,000 an hour. It is not cheap. So buyer beware. But if you are going to do one, I would recommend someone like Jen Benda, pay her to come at least take a look before you file it, because money well spent up front, she might save you tens of thousands of dollars in the back end. Um, we've talked about these. Trulieve actually did, in fact, file a massive refund. There's nobody knows at this point what's going to be the ultimate result of this, because we can't see the return. But if they just file a refund because they say 280E is going away, that was probably a very bad idea. Now, protective refund claims, things get a little bit better for our clients, possibly. So these are contingent claims based on pending litigation or pending changes in law, which you can say Schedule 3 is definitely a pending change in law right this second. The final hearings, in a month. You've got to look down at the bottom. If you do a claim in writing, identify specifically the contingencies, make sure it's sufficiently clear exactly what you're doing, identify the year, and based on an event. Make sure you do those things right. If I was doing it again for a client, I would still want a rubber stamp from someone that's a tax attorney in the space like Jen Benda as well. So these are less risky, still might bring an audit. You can, if you're the preparer, you can file Form 8275, helps protect you. If you have a reasonable basis, make sure you know that definition. There is a legal definition in the IRS code of what is reasonable. I think it's more likely than not 10% or more chance of success if it's challenged.